Hey, folks, happy Friday. Another place where I see people leaving opportunity for agita, things that make them feel crazy is when they don't have a set plan for the full trade, right? So professional traders will know, this probably doesn't come as a shock. They're confident in that they know what their edge is. They know how to express that edge. They might even have it and focus on, say, like the E-mini, for example, like the course that I'm doing with, Victor Sperandio is going to deal just with day trading and swing trading setups in stock index futures and otherwise, which is certainly a certain style. But in and around that, those people are very prepared. They know where they want to add the risk. They know how much risk they want to add. They know where they're going to get out if they're wrong. And if nothing else, they know how to assess the situation as they're making money. Do they sell a piece, raise the stop to break even? Do they just hit a price level and puke out the whole position? Do they do it more like me, where I don't lift any or remove any risk, but I do adjust the stop because I want to piecemeal my way into a trade to get to my optimum size? Different shapes, different flavors for everybody. But one of the things that I hear from a lot of folks, especially like when they ping me on social media or they write via email, is that they put on a trade, it started making money, and they didn't put in their protective stop because the thing didn't make enough money, didn't go down enough, but they were at a spot where they didn't want to remove the trade because they were focused on the promise of it. And those are like, I think I've talked about it before, like the four worst words, like in real estate, are like 5 worst words. Honey, I love this place. Because now the person's emotionally invested in the home. It has nothing to do with finance anymore. The worst thing you can do in the trading market is a similar expression. It's like, well, let's just wait and see. Let's see how it pans out. That's not what a pro would do. A pro might be mindful in watching the market activity to go down so that he or she or they can apply their known trading tactics that are congruent with where their trading edge is. But they're never, they're never sitting back saying, well, I don't know what I'm going to do, but I'm just going to wait and see, and then I'm going to act. There's always a plan to say, if nothing else, I've got my protective stop in the marketplace. Bottom line behavior. This thing could never run away from me and hurt me because the stop is going to knock me out. Now, there might be key inflection points in the move for that particular trading style where the trader might adjust their stop above, right? Raise it. But you don't want to negotiate with your stops. If you're down in the neighborhood where the name isn't working out and you're getting close, oftentimes you can just offset the trade for a smaller loss than the one that you were willing to take, because that's a smart thing to do. Another thing you could do is deploy a time stop and say, okay, normally when I put on these trades, they work out within 3 minutes. And if that's not the case, then the trade goes. If you're a longer term trader, you might say, I put on a trade and it works out between 1 and 2 days. I start showing money. This thing's kind of been plus or minus 50 cents. So I'm just going to offset it. But ultimately, you don't want to find yourself in a place of complacency, because preparedness is like, I know my list. Here are the ways I can express my edge. Here's where I add the risk to my portfolio. And here is definitively how I remove that risk. There's nothing left to guesswork. There's no deferring the feelings that I don't want to feel, because you can only manage risk in the ever-evolving moment of right now. I can't be in a trade that's, neither plus or minus any amount of money and then be like, well, I'm just going to figure it out along the way. Again, when you're beginning, you might be in that space. It's a little more difficult. But if you want to align your behavior with a role model or somebody who you know is a pro, I guarantee you that's very, very close to what they're doing. They're always thinking about, how do I manage risk? Because if I don't manage the risk, it manages me. And then my life is in total chaos because I'm constantly looking at the market for feedback. Like, if my names are up, I feel good. If my names are on, I feel bad. That's not the pro way to go about it. So be prepared. Always have an action plan and know what you're going to do ahead of time. That can give you the sense of confidence that you need to carry you day after day, week after week. Anyway, thanks so much for all the comments and the feedback. I appreciate that. Please like and subscribe to the show. If you leave a comment, I'll respond. If you want to reach out through the blog and give me an idea for a topic to cover on the show, I'll be glad to check it out. I don't have all the answers, but I have a lot of experience that I could speak to. So anyway, hope you had a great week, folks, and you have fun plans for the weekend. I look forward to some time off, and I will see you Monday. Take care. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.